We had launched FMP 127 about 3 years back. Of the money collected, we had invested some money in Essel group promoter companies. These companies had given us pledge of 1.5 times Z shares. On 25th of January, there was a selling of about 200 crore worth of shares of Z Entertainment by certain lenders. This resulted in prices dropping from about 400 rupees to 280 rupees. However, on the weighted average price, it was about 319. On 26th of Jan, there was a meeting of 44 lenders. 7,500 crore exposure there was from mutual fund. About 4,000 crore was from NBFCs and about 2,000 crore was from various overseas lenders. The 44 lenders representing collectively 13,500 crore worth of exposure to Essel group promoters took a call that if 200 crore worth of loan against shares are sold and prices could come down by 33%, there is no way we will be able to sell 13,500 crore worth of exposure without adversely impacting prices and converting our notional loss into actual loss. On 26th of Jan 2019, 44 lenders collectively took a call that panic selling of Z Entertainment and Essel Group company shares will not be good for us. We won't be able to recover all our dues from selling of shares. After we reached that agreement, we entered into negotiation with the promoter so that our dues can be recovered and our unit holders could be protected. Yesterday we had one FMP maturity, FMP 127. Today we have another FMP maturity. In yesterday's maturity, we have repaid all the exposures, all the investments which we had made other than in Z Entertainment, other than in Essel Group promoting companies, which were backed by the shares of Z, to our investors. We have not retained anything on that, contrary to popular perception or some news which is being spread out. The money which has been invested into Essel Group promoting companies, those monies have been retained. We will repay that money when we receive that money from the Essel Group companies. Now, because we have provided an allowance of time to Essel Group promoting companies, I needed to ensure that our unit holders are protected. We are better secured today than we were yesterday because we have obtained personal guarantee of the promoter. We are better rewarded than yesterday because we have taken some upside sharing if there is strategic stake sale in Z Entertainment. We believe instead of resorting to panic selling of shares, which would have resulted into much lower recovery than our dues, it is appropriate to give allowance of time to promoters and also secure ourselves with better security and higher interest rates. This will work well for our unit holders. Of course, unit holders haven't received all the payment of their FMP on maturity, but if the little bit of time, little bit of delay they can afford, they will get back. We are quite hopeful that they will recover all their dues.
Nilesh, so just a couple of questions. I believe there is two sides or two ways in which you can look at this story, glass half full or glass half empty. The glass half full argument first is that if at all lenders would have agreed to sell off the stake, which in normal course they would have, then the NAVs would have anyways taken a hit. So maybe you guys thought that let's give the promoters a chance to sell off their stake and then maybe get in the higher money. The question mark to that would be that what if, for whatever reason, the promoters of Z Entertainment are not able to enter into the proposed stake sale within the time frame that has been agreed upon as of now? What happens in such a scenario? Because then if the standstill agreement doesn't hold, maybe the prices are lower, and then if the mutual fund or the lenders or you or some of your other peers go out and sell, then the hit will anyways be there and might be even larger than what was thought earlier. How do you address that possibility? And therefore, what happens to the investors of Kotak AMC or some of the other AMCs?
Nirav, these are all hypothetical questions. You will be asking me the question if I had sold the shares and you had seen what 200 crore selling had done to the prices. If 13,500 crore worth of sales would have happened, you could have very well imagined what will happen to the prices. And then you will be asking a question, who are these fund managers who have sold Z shares at such a low price when they were buyer of these shares at 600 rupees just few months back? There is no answer to this. You have to look at what is good for your unit holders. We have been better secured. We have been better rewarded. And we are giving promoters time because it is in the interest of our unit holders. This is not working with promoters to help them. This is working for our unit holders because that will help us in recovering our dues.
Okay, just wondering, last couple of questions on this before we move on to the main topic of this show as well, Nilesh. One is, I'm presuming that the two entities that Kotak had exposure to, and I'm guessing a lot of other schemes have exposure to as well, they have defaulted, and as a result of which the monies that had to be redeemed to the FMP holders have not been paid in full, right? It's technically a default, and therefore, but because there is an agreement that the lenders have reached with the Z promoters, that there is no redemption happening from the lender's side.
Absolutely. There has been an allowance of time given to promoters so that they can make the payments within an extended period of time. Our FMPs are close-ended funds. They are not open-ended funds. Investors don't come in and go out. On the maturity of FMP, I have to make payment of the maturity proceeds. Of 100 rupee in the portfolio, let's assume if 90 rupees is invested into other assets which have matured and which are liquidated, and 10 rupees invested into Essel Group promoting companies, I have repaid 90 rupees back to the investors. In total, we have 8 FMPs where Z Group or Essel Group companies are there in the portfolio, or ITNL is there in the portfolio. In 7 FMPs, we are returning more than the amount we had collected, along with some appreciation. It's only in one FMP which has matured today where I am returning about 0.6% less. So every single investor in all those FMPs which have matured or which are likely to mature, based on our current estimate, we have repaid principal along with some capital appreciation, except in one FMP.
Okay. And final question, Nilesh, what would your message be largely to FMP investors? Because I think the debate that, or not really a debate, but a couple of topics that came about in conversations were that FMPs were considered to be such an alternative to fixed deposits per se, right? Yeah. But the idea should be that for anybody who's entered into FMPs, the idea should be not to maximize returns, but to optimize returns, and therefore enter into these plans with the knowledge that that is the purpose of this. If at all any question marks raised, what would your messaging be to people who have looked at FMPs in the past or even currently as options and might be thinking that what could be the near-term or the medium-term future be if indeed an event of this nature has occurred? It's probably for the first time after 2008 that something like this has happened again.
So in the fixed maturity plan, if you notice, there has been a deferment of payment. It is not default of payment. There are lots of articles which are talking as if we haven't paid back to any of the FMP holders and they are unlikely to receive any money whatsoever from the FMP. I'm sorry, this is not Madhopura Mercantile Cooperative Bank. This is not Kapol Cooperative Bank, but deposit holders haven't received any money. This is FMP where we have repaid all the proceeds to the investors other than our investments in Essel Group promoting companies and ITNL. In 8 FMPs where these two exposures are there, in 7 FMPs you are getting back your principal along with accrued, along with appreciation. Only in one FMP you are getting little less, 0.6% less than your principal. And as we work with the promoters of Essel Group, where we have taken personal guarantee of promoters, where we have upside sharing if there is strategic sale in Z, combination of this will ensure that you will get back your money by 30th September along with accrued interest and appreciation. So you have to bear with the FMP investment. What we have done is that we haven't converted a notional loss into actual loss. Otherwise, all of you will be accusing us, why are we selling shares so cheap? We are not working for unit holders, we are working for the buyers of the shares. We are not doing that thing, we are protecting our unit holders' interest. And in order to protect my unit holders' interest, I have to work with promoters. If promoters are desperate sellers, they will not realize full value of their assets. If we give them time, and there are newspaper reports to say that they have put their stakes in various companies on block, and we are quite hopeful that they will be able to sell their assets in a reasonable fashion, in an orderly fashion. Their net worth, their assets are far more than the total borrowing they have done, and they will be in a position to repay lenders. This is not a question where there are only liabilities and no assets. It's a question of liquidity mismatch.